Good morning, traders. This is Christopher Terry with the opening play video for Thursday, August 28th. We're going to be doing some videos. I'm going to be posting them to YouTube over the next month. So the nightly videos will be posted both to the IML website and also to YouTube to start building up its traffic flow and content. So we're going to be putting them there. Okay, let's take a look at the S&P EMini futures. Let's take a look at what we have above the market and below the market. So what I did was, in this particular instance here, is I've taken all these swing highs and swing lows and drawn out my ratios. The ratios are based on phi. And that's your 38, 50, 60, 18, 786, 886, 1272, 141, 1618 extensions. So we have a lot of areas of commonality. Now what I did was I drew a large range up in this area for the purpose that the fact that the market is still in a very strong uptrend. So I don't think calling a particular zone, let me just fix this. I don't think calling a particular zone resistance or level resistance would be right, because in a very strongly trending market, you can have excess to the upside. So since we're in a upward trend, I want to give a zone. So the zone that I see, the lower end of the zone is 90, 275, 93, and it goes as high as 2012. So we have this zone to watch that if the market still needs to push up a little bit, we can allow for that to happen and start watching to see where price tests and see where resistance comes in. If it starts to break below this 93 area, starts breaking to the downside, then we're going to look at different levels. Like for instance, the first obvious level we want to look at is this recent swing high, which is at around 85 and a half is what it looks like to me. All right, so right there, 85 and a half is a big important level. So if the market was to break, that would be the level to watch. That's where everybody's going to pay attention to, basis the September futures. All right, and from that, then we have other levels to watch below. Now, what we're looking at on this other chart right here, we have this swing low area right here, which is around 92, prior swing high. So you got a little zone here to watch on the downside. And again, on the upside, the recent swing high was at 2002. So this is going to be playing a major factor. If prices can test up here again, then we're going to watch, see if resistance comes in or a lower high, and see if they want to make it lower. The other thing is, if they come down to this level, we want to watch, see if support can come in. We're still in a strongly trending market. All retracements have found support. If it breaks, then we have that 85 and a half, as you recall, we just discussed. And also this swing low right here. You got a double bottom down at around 82, 81 and a half. We're not going to be so exact right now since the market's up in the moon. So little areas to watch going forward that we're going to keep our eye on for the S&P EMini futures. Okay, going forward, let's start looking at the Forex markets, and right away we have the GBPCHF with some work I did earlier today. And we got little swing highs and swing lows in here. We can see our MACD from the 310 oscillator has corrected up. It still can correct a little bit higher, but overall looks like a little bearish pattern that wants to test down again. So here's a market that you can watch, the GBPCHF. Any further upside, you got very, very good resistance, and I'm expecting this to at least try down again. It's tested 38% retracement, and should it break lower, we can go at least to the 50% line, and then we'll determine at that point what the next play is going to be. If we look at the hourly chart, we see a little double top here. So any shorts that are taken, your risk would need to go above that area and not any further above that. Okay, we're looking at the USDCHF. As we can see here, this market tested these swing highs. You see little swing highs. So it developed right here a big range to watch, and the USDCHF traded into this range. This is a resistance zone to watch. So we're looking for this to push back down out of that range. Should the market try to test up again, on the hourly charts we see we got very, very good resistance up there still. So any tests up, we would expect to have limits on the upside and back down again. However, as we said, if the market starts to break down below the area it is right now, then we can start kicking in. We got our oscillator, the MACD, is starting to turn to the downside. Good area to watch, and little divergence on that hourly chart. So maybe get a little bit of a correction up, but I think overall I'm liking the downside. We did have off the lows 0, 1, 2, 3, 4, fifth push up. So that tells me we had a nice little, not a perfect 5 wave, but we did have 3 thrusts up, 1, 2, 3 in general, and typically that would lead back at least for a correction. Okay, and the last chart we're going to look at today is the NZD-CAD. Let's draw out a pattern, so at least do a little education tonight of what I would look for. So here is your first rally up, that thrust up. All right, and that thrust up, we're going to draw, I'll put it in drawing mode, and we're going to do some Fibonacci. All right, we have that. And then what we're going to do is we're going to draw from here to here. And then we're going to draw from here to here. And then we're going to draw from here to here. So what we're going to do now is establish different zones to watch going forward and how everything's going to relate together. So the first thing we're going to look at is where on the downside can this market come. All right. The first area hit roughly this 38, almost at 50%. But looking lower, where can we look? Okay, you got your 618. Looks like you have an 886 area below here on this zone, right there. Okay. So we're going to get rid of. We're going to get rid of 1, 2, 3. All right, then what I like to do is get rid of all this other good stuff. Actually, let's just change the chart here. All right, so we're using a NinjaTrader platform, and I'm showing you how I typically like to look at the market. All right, then we'll just throw 127 extension in here. All right, I see nothing's lining up, so we're just going to pull that out for now. Okay, so we have this zone. All right, initially we have this zone. Then we're going to look at this in 2 different ways, and I'm going to explain that in a moment. All right, so we're going to take this, we're going to look at an extension to the downside and see where that information comes in. So we can see the 1272 and the 162. So, and let's get rid of, we'll keep the 200, we'll get rid of this. All right, so we're starting to see clustering. All right, we're starting to see clustering. What I'm also going to do is take this, make a copy, alrighty. And this is how I do my charting every night, believe it or not. we're going to take this swing that we just had, right, A to B, and we'll have another swing to the downside right there. So you can see it's 100% and also the 886 level all come in right at that zone. So what we're going to do is we're going to remove. All right, we're going to remove this area. We can move that, remove that. And now we could see a perfect A to B, C to D relationship to the downside. Now this swing right here, this is going to create an extension to the downside. All right, we see right away the 141, so we get rid of the 13. All right, we get rid of all that. And we can see the extensions to the downside starting to take shape in here, okay? So we also want to pay attention to the fact that the market is also in an Elliott wave type of manner. So we have this swing down, swing up. Okay, we got that. And you got your 0 to 1, 1 to 2, right? 1 to 2, 2 to 3, 3 to 4, and 4 to 5. So potentially, if we look at the if we look at these swings here, all right, we'll just get rid of these little swings. Off the market high, we have 0, 1, 2, 3, right? So pushing down, this could be a fifth wave into this zone right in here. So now what we have, we have retracement levels of all sorts. We have extension, we have projections. And now we start looking at this in a way to start drawing in our harmonic patterns. This is what I like to do on a typical basis. I'll just remove this for now. Now this 786, I don't need this here anymore, right? We don't need this. It doesn't match up. All right, so we see how all this ties together. Now what I like to do is start drawing in my harmonics. Now there's different ways to look at this. How I look at it is, as long as there's enough geometry in the market, as long as there's enough geometry, the harmonics will work themselves out. Meaning, it don't have to be a perfect ratios as some people look at, because they're only looking at it in one horizontal level, meaning that it has to be a strict 886 at a particular zone. What I do is I start looking at zones, and I look at the ratios in these zones of where support and resistance can come in. This area right here, this is a key zone. Let me just finish drawing out everything, and I'll start pointing it out for you. So right in here, like this, let's take this color and just make it a different color. There we go. Okay. So what I look for is a couple things. I look for my X, A, B, C, D. Most important is this A to B, C to D relationship. Now within the C to D relationship, I like to look at Elliott. I like to look at other ratios, and the fact that we're getting this wave down, we still can come up and then down again. It's still telling me that this process is still on a trend down. It means it still can come lower. Now, does that mean it stops there? It could still flush into the zone. Fine. I see we have a wide potential zone because we have a swing low down here. We have to be respectful of that. And any trading into the zone, sorry, any trading into the zone, from here I'm going to become serious. and then down here I'm going to become serious. The risk is going to be down here somewhere. Okay, the risk is going to be completely out of the way, or maybe not even that deep, but it'll be out of the way. Once we see the market come down, how we're going to look at this is once the market puts in a low, for instance, it'll test the zone, and the next bar is it'll get a turning point. From that point, then I'm going to start looking at buying on dips, but we have to have that low established. So the market can have access to the downside, and once it stops going down, then we'll look at turning points, bars to look at. So for now, the NZDCAD still should be on a watch that it potentially can work into this zone. It'll have some really nice harmonics. You got swing lows down here. You got other little swing lows that were in this zone, and also all your different ratios come together right in here. So what that's telling me is keep it on your watch list, NZDCAD, and if it pushes down into support, get yourself long. Once the price turns, then you can tighten the stop and get yourself a nice trade opportunity. But for now, those are my thoughts on the market. I think we just really want to stay out of trouble. Also, it's the last couple of days before a major U.S. holiday, and from that, let's have a great weekend. And I'm going to be posting this to both YouTube and also to our traders back office every single day for the next month, maybe the month of September, just to get some activity and see let other people see what we do in terms of our chart work, and expose it out to the public a bit. We just got some really good relationships speaking in the Money Show in Vegas. We got a lot of good things happening at iMarkets Live, and just want to share it with the world. Rock